Okay, so now having done all of that, I want to dive straight to what we have today. What we have today is trends. So let me go to whiteboard. What is a trend? So this is what we're looking at today. If we can cover it like the whole of it today, no problem. If we cannot, we continue because trend is actually very, very big. So when you hear the word trend, what comes to your mind? Let me ask you. Let's say you are an English student, for example, and you hear the word trend. What comes to your mind? All right, since you can hear me, let me just keep talking. So a trend is, you can use the word style, you can use the word behavior, right? You can also use the word character. When you see the word a trend, these are the things that comes to mind. So first of all, you must understand the English meaning of all these words, so that when we begin to define them or use them in trading, it will become very easy for you, right? So a trend is a style, a behavior, a character, or you can say a pattern or pattern. So these are the words to mean trend. So let me just go here. A trend is the style, behavior, character, or pattern of an asset over a period of time. So whenever you hear trend, time is actually of essence. You can't speak of trend without time as in period. Okay, so whenever you speak of a trend, time is always factored into the definition, right? Whenever we talk of a trend, what comes to mind is the style, the behavior, the character, or the pattern, okay, of an asset over a period of time. And I said you can't speak of the word trend without time. So time is of the essence whenever you mention the word trend. And also, in the same way, I said before that the forex market, or whichever market, whether it is derivatives, stock market, they are all, the prices of those commodities traded in those markets are represented graphically in the form of a candlestick chart, which is what I showed to you yesterday. You will not know how to analyze the price of an asset if it is not graphically represented for your eyes to see. So that graphical representation is what we call the chart. And in trading, most often, many of us, more than 90% of traders, uses the Japanese candlestick chart, which is what we've talked about yesterday. So now, if I want to analyze the trend of an asset, it means I want to know the behavior. A trend of an asset can be seen when you look at the chart, which is the graphical representation of the movement of price. So you will not be able to analyze, to buy a commodity or sell, if there is no chart visibly for you to analyze. So that attribute or that character of analyzing a chart is called technical analysis. It's called technical analysis. So the technical analysis is what we use trend to analyze, to do. So when you are using trend on the forex market or on binary market, on any market at all, it is technical analysis you are doing when you are looking at the trend of that asset. Am I understood? So now we have three major trends in the forex market. We have three major trends. So we have number one, the upward trend. Number two, we have a downward trend. And then number three, we have a sideways trend. So all these ones have different names. They are called by different authors or different analysts. This upward trend can also be known as a bullish trend, or some also call it a buy trend. Some also call it with a bullish trend, a buy trend, or okay, let me just leave it like that. There are many names they call it, but these are common names they call it. So then for the downward trend, some call it a bearish trend, some call it a sell trend. While for this sideways trend, some call it consolidation markets, right? So these are the three types of trends that exist in the markets we are learning. So whether you are looking at forex or you're looking at binary, it applies to both, right? So this is the types of trends that we have. So what I'm going to do now is going straight to the chart to show you examples of what these are. But before we go to that, let me draw them. So for an upward trend, the market is going to move from a low to a high, then we come down to a low again. This low that is being created is going to be higher than this previous one at the bottom. So it's not going to be equal like this, it's going to be higher, right? So then the market will move up again and create a new high. This high is going to be higher than this one, this particular one. They are not going to be the same like this, it's going to be higher. Okay, so then the market will come back again, raise another low that is higher than the previous, and then it will continue in this manner. Now when you see something like this, this is what you call an upward trend or a bullish trend. The word bullish comes from the word bull, that animal called bull, right? A bull is an animal. When it fights, it throws its prey with its horn upwards. So if the bull uses its horn to fight, it uses the horn to pick the prey and throw it from the ground upwards. That is a character of a bull. So that is why a market that is going up is called a bullish trend. Are you with me? So then for a market that is going to be bearish, that is going down, it will come from a high point and come to a low. Then it will move up again from that low and come to a high that is lower than the previous high. So it moves like this. Then it comes down again to a low that is lower than this one. So everything about the downtrend is lower, right? So then it creates a high that is lower, then it creates a low that is lower, creates a high that is lower, and the market continues in this manner, right? So this is a bearish trend. Bearish because when a bear is fighting, it uses its claws to pin its prey down. So that is what a bear do when it fights, right? So a bear fights by pinning down his prey with his claws. So a bearish market is a market that is going down. Then a sideways market is a market that is neither going up nor down. So the market is just moving from a low point to a high point, and then it comes back from that high point to the low point that is equal to the previous, and then it goes up again in this manner. It keeps creating equal highs and equal lows. When you see market moving in this manner, it is called a consolidation or a sideways trend. There are things to do in each of these markets. I want to label this for you properly. So in the Forex market, this is going to be a low represented with an L. So let me just put it an L to mean low. I will mean. So then this is higher low. That's what you call that one. Higher low. The low is higher. This one the same thing, higher low. This one is the same thing, higher low. Then this other side, this is a high. Then this is a higher high. This is a higher high, and this is a higher high. So that is how an uptrend is represented. So a low to a high, moves from a low to a high, then it comes to a higher low, then moves to a higher high, comes to a higher low, moves to a higher high, comes to a higher low, and moves to a higher high. So that is how the Forex market that is trending upwards keep moving. Are you with me now? So then the reverse is the case for a downtrend. Here will be a high, here will be a lower high, LH. Here will be a lower high, here will be a lower high. So then here is going to be a low, here is going to be a lower low, here is going to be a lower low. The same thing, here is going to be a lower low. So the character of a downtrending market is that it keeps creating lower lows and lower highs. Now listen, a downtrending market sells from a top. It sells from a top. I repeat, let me put it by the side. A downtrending market sells from a top. I hope you can see what I'm writing correctly. Are you seeing that?
Yes, sir.
Okay, so an uptrending market buys from a bottom. So, or you can actually say lower prices. Let me just do it that way, or lower price levels. Okay, so an uptrend market buys from a top, buys from a bottom or lower price levels. Why this one higher price levels? So that's the way it happens. Now for a sideways trend, what happens here is equal highs. So equal highs, that's how they call them. They are the highs, they are equal highs, then equal lows. So in this type of market, the market is neither buying nor selling, it's just consolidating. What that means is it is gathering volumes in that it is trapping people's money. It is gathering momentum. It is gathering what we call liquidity. Liquidity is money. So this type of market is actually deceiving people to buy and sell. It will look like it's going up. So people who are buying will buy. Then it will come down again and stop them out on a loss. Some, they will not be on a loss yet, but that market will be in negative. Then the market, those who think it is selling will now join the sell. Then the market will now start buying again. It keeps doing this until there are a lot of buyers and sellers trapped in that small consolidation, right? So then what the market will now do, it will take a move, a serious move away from the market, either up or down, a very serious move from one of the highs or one of the lows, up or down. So once it does so, it has broken that range. They actually also call it a ranging market. This market, they also call it a ranging market, right? So yeah, so this market can actually trap people's money, but also there are strategies created to be able to take advantage of such a trend. As you are practicing, you are going to learn to trade all kinds of market. So it takes time. Just practice. That's what it requires. Are you with me now? This is what we are going to be talking about majorly in the coming days. So a trending market is a market that have a character or a behavior of either going up or going down or going sideways. What do we do in a market that is going up? In an uptrending market, we buy from the bottom or from the lower prices. That means we buy from the lows. That's what we do. Then from a downtrending market, we sell from the highs. That's what we do. Are you getting me? So all these areas where you see high, lower high, these are areas where we sell from. Why this area where you see higher low, these are the areas we buy from. So we buy in an uptrending market while we sell in a downtrending market. When prices of things are going down, you sell off so that you can make profit. So that when it comes down, you will buy again. So when the price comes down, you go and buy again. Then when market starts going up, you sell when the price is high. You buy when the price is low. It's common sense. It's something we do as traders every day. You understand what I just said?
Yes, sir.
Okay. So now let me take you to the chart so I can show you all of this scenario. Then we'll see what will happen from there, because I want to take this course in a way you understand. I don't want to rush things. Okay, so I want to just show you what an uptrend and a downtrend is. It's actually everywhere on the chart, but let me use a different time frame. Should I use this chart? I want a chart that will be so easy for you to understand. You can already see them, but okay, so let me just draw this. This market moved from a high and sold all the way down to this place.
Can you zoom it a little?
Okay. If I zoom it, you will not see what I'm trying to show you. Let me zoom it. You will not see it. Just let me draw it first so that I will zoom it.
Okay.
Let me draw it first so that I will show you. So this is a movement from a top to a bottom, right? So that is this the high, this is the low. Then the market moved from that low price to this high price. Okay, so this high that is here is lower relative to this one. Then the market moved down from that place down to this low. Then the market moves up again, and then market came down. So this is a structure of a downtrend. This is a 4-hour time frame. What that means is each of these candles you are seeing takes 4 hours to form.
Yes,
Each candle you are seeing here now took 4 hours to be formed. So this is a downtrend. So in the case of what we said before, here will be the high, the H, here will be the low, the L, here will be the lower high, LH, here will be the lower low, LL, here will be the lower high, LH, and here will be the lower low, LL. So that's for an uptrend. Now another thing I must show you that inside a trend, there are other trends in lower time frames. Inside a trend, there will be other trends inside of it. So for example, this area of the chart, let me mark it with a color. Is it light enough? Can you see the candlesticks inside the box?
Yes, please.
Okay. So now inside this area I just marked now, I'm going to go to a lower time frame now, which is the 1 hour time frame. Now this is the area I just marked. You can see something here that inside that particular trend, let me remove the period separator. Inside this particular trend, there are other trends. And how do I know that? Let me draw it for you to see. There's a movement here, and it came back up, came down, came up, came down, came up, like this, right? So you can see that inside a trend, there are other trends. Are you getting me? So the same thing, if I
Yes,
keep
sir.
going down to lower time frames, I will keep seeing another downtrend inside this downtrend again. So that is how trends are built. That's how we use trend to trade. So now, when you use the 4-hour time frame to know the bigger picture, to know where the market is likely going to, you come to a lower time frame like the 1 hour to find a place to join the sell. So once the sell has started, there will be things you will see to know that a sell is about to start. So once the sell they have started, you come to a lower time frame to find a place to join the sell. So that's what the strategy I will teach you will look like. So that will be when we have entered maybe the 3rd week or so. I still want to make sure you understand trends before any other thing. This is for a downtrend now. Now, also, there's what we call a trend line. A trend line is a line that is drawn to join 2 or 3 points in the chart. This particular line I drew before, let me remove it. Now, I can actually join this first point to these ones, and I can join them like this. Once you do something like this is actually called a trend line. If you are drawing a trend line, a downtrend line, it must touch the highs, at least 2 or 3 touches. So you use a downtrend line for a downtrend. The point that will be touching is the top, the highs. That's what you do. Are you with me now? So
Yes,
this is
sir.
a downtrend line.